I'm Charlotte McLeod with the Investing News Network, and here today with me is Keith Weiner, founder and CEO of Monetary Metals. Thank you so much for joining me today. It's great to see you.
Thanks for having me.
Of course. So we're here at the New Orleans Investment Conference. It's our first time talking. So I was hoping to begin, you could tell me a little bit about yourself and your work at Monetary Metals, just for people who may not know.
So I was originally a computer geek in high school, went up to computer science school, dropped out to build a software company, which I sold to Nortel Networks in 2008, right before the crash.
Yeah.
So I'm sitting there in cash watching the whole world crash and burn, starting to study economics, saying what is going on, how do I protect myself? From that came to gold and the idea that the world has a monetary problem and gold is going to be the path out. I want my next venture to be something that's part of the solution. Founded Monetary Metals with the idea of the world needs a path to return to honest money, and that path is paved with interest. Interest is the force that will pull gold out of private hoards and into the market. So that's what we do. We pay interest on gold and gold.
There we go. And when I was reading your website, I noticed that when you were founding the company, there was a big concern about debt, right? And of course, we recently saw U.S. debt go past 31 trillion. That seems untenable to me, and yet it still keeps going. So what are your thoughts there?
So the design of the system, it's all well and good to say, well, what if we had better politicians and more disciplined politicians? What if we had Ron Paul as president and Justin Amash as the Speaker of the House and so forth? And certainly we have politicians that like to spend like drunken sailors. That's certainly true. But even if we had better politicians, the system is designed, it's wired a certain way. It has to behave the way that it behaves, and that is the debt has to grow exponentially. It doubles about every 8 years, and it's been doing that since 1971, whether you have a Republican or Democrat in the White House, whether you have a Republican majority or Democrat majority in the House or the Senate. It just keeps on doubling every 8 years. So assuming the system survives that long, you're looking at 62 to 64 trillion another 8 years in 2030. And it will just keep doing that. And of course, exponential trends can't grow. It's not sustainable. They blow up. And so that's what, eventually nobody knows when.
Yeah, of course, that's the key thing. And so, you're mentioning that you formed the company in 2008, and I think everybody today wants to look back at previous times and compare what we're seeing to sometime in the past. So does what we're seeing today in the world remind you of what was going on back then, or do you find it compares more to some other time period, or it's totally unique?
I mean, there's some things that are unique. If there was a time period that compared to 1929, comes to mind, but also 476 AD, like a total wipeout of civilization is what's we're not there yet. But the reason why this looks a lot like 2008, which looks a bit like 2001, which looks like 1998, which looks like the late 1980s, is they keep kicking this can down the road. So the problem is too much debt, too much leverage, and the only fix they have, and I should put fix in scare quotes, is let's lower the interest rate, ease credit, and make it possible for people to just lever up more. And it's not really a fix. It's like, suppose you're overtired, but you don't feel like going to sleep, so you take caffeine. And then when the caffeine doesn't give you a kick anymore, you take cocaine. And then the cocaine doesn't give you a kick anymore, you turn to whatever, then crack, I guess. You keep turning to the next more powerful drug. And so each one kind of rhymes because it's the same thing, just taken to a greater extreme. 30 to 31 trillion in debt versus what was the debt in 2008, 10 trillion? Something like that. It's this incredible trend.
Right. So talking about kicking the can down the road, maybe lowering rates at some point in the future. Right now, we are on a path upward still. So I want to talk a little bit about what's going on with the Fed and what their path forward may be. We got a couple of pieces of data this week that I think may inform. We got the Fed meeting minutes this week. We got CPI data today. What do you think is coming next for the Fed?
I think that they can make a great show at playing at hiking rates. And I like to use the analogy of like it's a black hole. And if you study the physics of it, the gravity is very powerful, even really far away. But there's a line called the event horizon. If you get inside of that, then you can't escape. You're going to crash into the center, which is zero. And I think the interest rate's been falling since 1981, and I think we're long inside that event horizon. So we can play at trying to hike rates, but look at all the pain that a couple of small, relatively small, all things considered, rate hikes have caused, and not just in the U.S. I'm going to be talking tonight on the main stage about what's happening in the UK, how the whole pension system came this close to just imploding. Um, every time the interest rate falls, people get less and less return, so they have to use more and more leverage. And then if rates were ever to go up, anybody who's using leverage has two problems. One, their cost of funding just went up, and two, the value of their assets. And the asset side of the portfolio is crashing. Liabilities are fixed, assets crashing, cost of funding going up. It's a perfect storm for insolvency. And so the Fed is going to have to abort. I said the same thing in 2015 when they were, playing at hikes. They're going to have to abort. They're going to have to pivot. And the question is, when does the pain rise to the level that the Fed perceives it and says, okay, Uncle, we're gonna, and no, it's a political decision. So how can you predict that?
Well, exactly. And it's an election year coming up. Do you think that has any bearing on what they may decide?
I'm sure it does. And then the real question is, does Powell want to help Biden hurt him? Does he want to prolong the pain until after the election, or does he want to give Biden a boost? And what kind of backroom deals are being done? And I'm not privy to any of that. I couldn't even begin to guess. I just know that we shouldn't have control of our money and our economy be subject to such political forces. This is insane.
Right. And I know amid all of what's going on, there's been disappointment in what's going on with gold. Why isn't the price higher? It's a question a lot of people have. What would be your take on that situation?
So I think there's an awful lot of buying of gold going on right now because how can you look at what central banks are doing and where they have to go? I'm not the only one who can see the Fed is going to have to pivot. The Bank of England effectively just did pivot. Things are broken in Japan in very fundamental ways. So there's a lot of people who are buying gold for all the right reasons. But at the same time, there's a lot of forced selling of gold, margin calls, and not necessarily on the gold part of the portfolio's leverage. There's margin calls in other parts of the portfolio where these assets are illiquid and can't be sold easily, and they're getting margin calls and other things. You sell the thing that isn't nailed down, that's gold. When that selling pressure abates, because I think that's a finite path that we have to go through, I don't think the buying pressure is going to abate, only the selling pressure.
Right. And silver as well. I know there's some excitement about silver toward the end of the month, early this month. We saw the price going up. But as people will know if they follow silver, it's very volatile, right?
Right.
So what are your thoughts on silver right now? Do you think, because it's got its precious side, it's got its industrial side, what's the most important for it at the moment?
I think the precious side becomes of greater importance as we go forward. Industrial, I think demand is softening with the overall economy. But I think the difference between gold and silver, they're both precious metals, they're both heavy, they're both shiny. Gold doesn't tarnish. Silver is pretty hard to tarnish. It's not like steel, which just rusts to pieces. But the difference is silver has always been the savings of the working class, and gold is a capital asset for the capital owning class. So as long as there are capital assets that are trading, there's a firm bid for, and so you can have the price of gold rising. But silver is what people put their wages into. If you're a skilled tradesman and you want to put 10% of your weekly wage, $50, $70, something like that, into precious metals, it's impractical in gold. So that they've turned to silver. It's been that way for thousands of years. But as the economy sours and people either lose their jobs or their jobs are under stress, they get fewer hours, they're getting pay cuts or whatever, then their ability to buy silver is diminished just because they don't have the means. And so you can see that gold-silver ratio rising. That said, I think right now there's a lot of enthusiasm for silver, and if that sustains, then we'll see a blip in silver up to at least mid to high 20s, I would think.
Right. Do you look at prices for either gold or silver? Do you have any predictions you would make, or is it too hard to tell given all the various factors?
We put out an annual precious metals outlook report, and this year, so we put that out end of January. And this year I said, this is the hardest year by far. I've been doing this for a decade. And we gave ourselves a report card of, like, we looked at all of our previous calls. Most people, when the calls are wrong, kind of like to bury them down the memory hole. And we said, look, we got it right more than we got it wrong. We had a few bad ones. We had a number of good ones. This year is by far the hardest. And that's because we're sitting here, and at the end of January, the Fed was making noise about hiking rates, but we didn't know, are they serious about it? Are they really going to go through this? Is this just, to try to tamp down the market enthusiasm or something, but not actually go through with it? And if they go through with it, that is not going to be, they're certainly going to be bearish for silver, and quite possibly not bullish for gold at least. And then if they don't go through with it, then both metals prices are going to rise. Now that we're in the middle of this, I think it's a matter of, okay, the prices have gone down probably about as much as they're gonna. And then as soon as the pivot happens, I think there's going to be a huge bid in the market as everyone says, okay, the Fed is back to easing, back to printing. And then, I think you could easily see gold at 1900 to 2000 and silver at 24 to 27, something like that. And it's like, when is the Fed going to do that? As we said, it's a political call, and nobody, at least I could never guess as to when that would be.
Yeah, certainly that's what I'm hearing a lot this year, is that it's really difficult to make a prediction and actually have it be accurate. So we'll wait and see. When it comes to the precious metals, I know a lot of people, especially here, are concerned about market manipulation. Is that something that you consider when you're putting together your forecasts?
So I guess I'm infamous for being the guy who says there isn't a precious metals manipulation. And I say that based on, first of all, the data. So we've published on our website for free is there's daily data, 65 different charts of gold and silver markets, and we can see kind of the micro internals of what's going on in the market. The data doesn't bear it out. We put out a response. So Ted Butler is probably one of the top people promoting the silver manipulation, and he wrote a piece basically saying, hey, look, I'm kind of an emeritus professor, I've done my thing, I've taught the world, I'm retiring now, I'm getting old, and but I encourage thoughtful disagreement. So we put out a piece that I entitled Thoughtful Disagreement with Ted Butler, which is an open letter that says, first of all, I would like to steelman, the opposite of a straw man, and summarize your position in a way that hopefully you would agree that I got it right. This is what you're saying. And now let me go through and address this and say, okay, if you have two competing theories, you find a corner case where those theories predict opposite outcomes. So your theory would predict this in this case. I don't want to spoil it, but the article's on the internet for free. My theory predicts this case. Now let's take a look at the data. And we had 20 some odd years of data going back to 1996 saying, for 130 some odd futures contracts, this is how they all behaved. Here's the graph of it all overlaid. And the data just doesn't show the manipulation that people claim. But the other half of it is, in my travels, I get a chance to meet a lot of legislators. I get a chance to meet treasurers and controllers and central bankers. Now, not at the level of Powell, but let's say 1 to 2 levels down, and internationally. So I've had a lot of conversations with people that are kind of off the record and fairly, on the level, fairly frank. These people don't think about gold. They really don't. If you ask them about gold, it would be like walking into a Tesla engineer and asking him about where's the carburetor. I mean, he would just kind of pause for a minute and be like, wait, what? Didn't those things go out with bell bottoms in the 1970s? Like, they don't think about it. They don't care about it. That's not, the last Fed chairman who really cared about it all was Greenspan. And before him, obviously, Volcker. But those were a breed of Fed chairs that grew up in the gold standard, studied it, wrote about it, thought about it. The current crop, not even in the top 100 list of issues for them. And so to say that this is all manipulated, it's kind of like, they don't care about it as much as we do. Let it go. These are big markets. Virtually all the gold ever mined in human history is still in somebody's hands. The idea of manipulating that is like manipulating the ocean. I mean, where would you even begin, and how much energy would it take, to do that? Silver, obviously, a much smaller market, but so anyway, so I'm infamous in this space for saying that, but I'll die on that hill if I have to.
Okay, well, I guess we can I would love to read it. We can leave a link maybe to your response in the video description. I think it would be interesting for people to check that out. As we're finishing up here, I know people come to conferences like this because they want to know what to do. So, what's your best advice for investors in this environment?
Well, I think our company has a great offering, which is earning yield on your gold rather than paying storage fees on it. But I think, more broadly, the most important thing is get educated, understand what is happening, and certain things get technical if you want to read about the Fed and what quantitative easing actually does. You've got to understand this stuff because everybody who's pitching you, everyone who's pitching you a story has a product or a business model behind it, and you have to understand what makes sense. And you have to decide that for yourself. Don't listen to me. Don't listen to anybody. Just get educated and then become an advocate. This system is nuts. I mean, if you're looking down at this planet from Mars, saying, look at what these Earthlings are doing. This is insane. Why do we politicize, the economy this way? Why does it matter whether Powell wants Biden to get reelected or whether he wants him to lose the election? And the entire economy is held hostage and is either going to be taken this direction or this direction as a result of that sort of personal feeling. We need a better system.
Okay, well, and I guess that sounds like a good note to wrap it up on. Thank you so much for coming by to talk today. It was great to hear your thoughts on what's going on in gold and silver and the markets.
Thanks for having me.
Of course, and once again, I'm Charlotte McLeod with the Investing News Network, and this is Keith Weiner with Monetary Metals.